Good evening, everyone. Please let me know if you're here. Hello, good evening. Good evening. Please say hi if you're here. Okay. Hello, Meg. Good evening. I see a comment. How are you? Hey, hey. Good evening. How's everyone doing? Mm, Cool. Hey, hey, Mimi. Good evening. How you doing? Excited to see you at the summit. Looking forward to it. Let's see who else we've got here. Hey everyone. Hey everyone. Welcome. Welcome. Please, if you're here, type your name or say hi. Hi, Matunde. Good evening. How are you? Good to see you here on our live session. How's everyone doing? Okay, please type in the comments who you are, your name, and where you're from. Hi, hi on Instagram. Hi, Queen Honor. Good evening. How are you doing? Hi, Peach Tree Property Management. Good to see you here. How are you doing? Welcome, everyone. Sorry for the delayed start of today's session. Uh, Facebook decided to not allow me in, so I had to reset password and all of that good stuff. And still that didn't work. I have changed computers. Anyways, how's everyone doing? Everyone good? Good. All right. Welcome on here. So tonight, I'm just gonna go into our session. Yeah, okay, good. I was just reading your comments, guys. So welcome everyone and good evening again. Firebucks says, hi, financial woman. Okay, good evening. Hey, Peachtree Property from North Carolina, and I see Firefox is also from North Carolina. Maybe you guys need to strike deals together, real estate investing deals. Okay, thank you for joining us. If you haven't introduced yourself, please go ahead and do that. Toro 198016. Good evening and welcome. How are you doing? All right, if you haven't introduced yourself, it would be my honor to say hi to you. To say hi to you. Okay. All right. So I'm gonna start to share what I've got going on today. I always have something going on. So I'm gonna go ahead and start to share. Please continue to introduce yourselves in the comments while I try to figure things out on my end. Mm. So let's share this, please. Okay, here we are. Oh no. Yeah, that's what I wanted. Okay, pause this. And here we are. Okay. A lot of rituals around here. Trying to share screens with you. Welcome again. Hi, Janaya. How are you doing? Good evening. Good evening. Nice to see you here. Okay. Hi, Wumi. Good evening. Welcome. Okay. Okay, guys. So I think I'm ready. So let's do this. I'm gonna go ahead and share. I like to share something so it's visual and so you remember. Because you can hear a lot of stuff. I can sit here and ramble all day and it still would be something you might be thrilled about initially, and then you might have a hard time just remembering what we talked about. So I'm trying to, as much as possible, allow things to stick. Okay. All right. Good evening again. So tonight we'll be talking about real estate financing strategies. Hi, Drill. Good evening. Real estate financing strategies. Hi, Kendall. Good evening. Hello, Wumi from Florida. Good evening. It's nice to see you here. All right. So again, tonight we'll be talking about real estate financing strategies. Okay, so real estate is not cheap, right? We all know that. Real estate costs money. And by the way, let me just start by introducing myself again. You might know me, but in case you don't know me, my name is Yinka Olumori, and I am a coach by chance on the Acquire Real Estate platform. It happened to me. So yes, I do that. I coach people on starting out in real estate. So focus on the newbie niche, focus on a lot on residential, so 4 units or less. You can still do 5 units or more, but 4 units and less is lower entry for the most part. And that's where we can really, really talk about like no money down. It's not so scary to you. So if you're looking to do things like wholesaling, lease options, maybe you want to do fix and flips, buy and sell properties, own a business, a real estate investing business, on properties, on rental properties, whether short-term rentals like Airbnb or long-term rentals or regular rentals you're used to, or Section 8, or multifamily, or maybe even new constructions, this is the right place for you. Okay. So, yes, welcome. I do this not by myself. Thankfully, I'm not lonely in this. My husband also invests in real estate. He's a licensed builder, and he also helps our community of students who learn the process and implement as they go. So anything construction related, that's really where we get help from. Hi, Tumba. Good evening. Hello. Hi, Nadia. Good evening. Hello. How are you? Looking forward to seeing you at the summit. Hi, Grace. Good evening. How are you doing? Welcome. Okay, so tonight, again, we're going to be talking about real estate financing strategy because money is usually a big deal to most people, for most people, and understandably so, right? Because real estate costs money. If you don't have money, how are you going to start a business? How are you going to even save anything if you don't have a base of, you're not able to save money, you're not able to figure out how to even raise capital. Maybe you're in a very expensive real estate market and you feel like this properties cost 600,000, you're going into $1 million, and you're wondering if you even have room in real estate altogether. Maybe you're seeing less expensive properties out of where you live and you're wondering, how can I even do this without being there physically, right? So those are the kind of things that we discuss. But here tonight, and I tend to talk about financing a lot because that's really what holds people back. When I speak with people, they're always talking financing. So I figured that you cannot overemphasize that. I figured that people would never get tired of listening to things about finance. And whether you're in the game and you feel like, I just need to continue to hear this so that I can actually do it, or you're just getting started and you have no idea how this works. So this is relevant on all sides. So real estate investing or real estate financing strategies. So again, welcome, and let's move on. Now, I'm just going to simplify things tonight, okay? And I'm going to talk about, if, let's say, or assume that you're looking to flip a property. And that means that you're looking to buy a property and sell that property. Okay. So you're looking to buy and sell. So it means that you're buying for cheaper. And I'm saying cheaper because I don't want to say cheap, because cheap depends on what market you're in. Can you still find 50K properties? Yes. Can you still find 100K properties? Yes. Is in your market? Maybe not. Can you still find 150K properties? Of course. We're finding $30,000 properties in some markets, but the cheaper it is, the harder it is to finance with a lender. So you probably have cash somewhere you can put into it if that's you. But talking about buying for cheaper, putting in some work and selling, you need money for two things. So you need money to, of course, fix the property, right? So you need money to fix this property. In this case, when it comes to financing, the rehab or the fixing side of things is usually and typically 100% covered. It's not hard to find a lender that will cover it at 100% of the rehab costs. So if you're buying a property for 100K and you needed $50,000 to fix the property, it's very easy to find someone who would cover that 50,000, right? 100%, right? However, when we're talking about purchase, right? Purchase is a different ballgame altogether. This is where lenders start to talk about skin in the game. I want you to have some skin in the game because I don't want to put everything, all my money, or I don't want to be 100% into your deal and then you don't take the deal seriously because your money's not in there. You don't have any investment in there, right? You can travel out of the country and never return. What am I going to do? Right. So the purchase becomes a different ball game when it comes to financing the purchase, but not so horrible, right? So you can actually be qualified for up to 100% funding on purchase if you're experienced. So if you're an experienced investor, you can opt for 100% purchase to be covered. But there are caveats that different lenders put in place to be able to do that for you. Okay. So you have less skin in the game, but they might expect you to do certain things, like maybe additional points, or after closing, you pay them additional points, which is not a deal breaker, right? So different lenders would have different approach to that. And there are not a lot of lenders that do 100% financing of a purchase price. Okay. But you definitely would need experience. They want to make sure that you can do the deal from A to Z for that to happen. So on your subsequent deals, you can qualify for 100% purchase price coverage. Okay. But that doesn't mean that you're not going to have, you know, fees that you need to pay at closing, small amounts here and there that add up, right? So you put everything to your share and make sure you know really what is my cost of getting into this deal. Okay. And then very commonly you can find a lender that would cover up to 92% even as a newbie. Okay. Like we have lenders within our program that do up to 92% or 92.5 or 93% actually for newbies. So you never did a deal. This is your first deal. They'll cover you 100% of the rehab costs, and they'll also cover you at 92% of the purchase price. You can also find something like this actually. Definitely can be common, and also depending on where you are with credit score. And that's why I'm a big advocate of having a good credit score. Just do something with your credit score. Be serious about it because it saves you money in the long run, right? But if you don't have that, then make use of what you have, right? So let's say you're coming across lenders saying that the max they will be at is 85% as a newbie. That happens. So in reality, when people say that they don't have money, right? They don't have money to buy a property. In reality, what it means is that they can't come up with that 8% or that's 15% that's required of them to close the deal. So they're having a hard time to come up with that 8 to 15% to close the deal. That's off the purchase price, so not off the total value of the property. And that's why in the real estate investing space, it's a lot easier because outside of real estate investing, you have to come up with, if you're talking 8%, it's bigger chunk because you're talking the actual value of the property. So let's say this 100K property actually could be valued at 250 if work is done on it and everything looks good. So on the non-real estate investing side of things, you're talking bigger chunk money, bigger chunk percentages to come up with. On the real estate investing side of things, when we're talking purchase price, it's usually a lesser amount than the traditional way, right? So when people say you don't have money, you're really struggling to come up with that 8% to 15% of the purchase price. That's minus rehab, right? So we know rehab would be covered. Okay. So the thing is, this is a big problem for many people, right? So many people are stuck. They can't get into real estate investing for this reason, or they don't even know that the structure exists. They don't even know how much they need, really. You don't know how much you need. You don't know. You just think you have no money. You just think you don't qualify. You don't know how much you need. You're stuck. You're not able to do deals. You're not able to buy properties. You're not able to move forward. So here are some options you have for you to come up with that portion without having to use your savings account. So if you had money and you're like, I don't want to use my savings, or if you don't have money, you have some options, which some might know, right? Especially my coaching students that are on this call. Okay, so here are options. First of all, you don't have it. What do you have? Because you can't just come into a deal and say, here I am, I have no money, I have no information, I have nothing. I just want to get things done. Just give me money. Let me, or maybe give me money and teach me. Or I'm not sure what to do, but I need money. So that cannot work because at least you have to be sure what to do. You have to understand how the deal works. What are the numbers on the deal? If you got money today, how are you going to structure the deal? That's the only way you can move forward. So if you don't have money, you have something. You have maybe you have experience or maybe you have knowledge, which is a big deal. Your knowledge is highly valuable, right? So with that knowledge, you're able to do a joint venture with somebody else who has what you're looking for. So somebody else has a down payment, and don't tell me there's no one in your circle that has 10,000 or 20,000. They're there. They're just not telling you they have money because the situation, prior situations haven't called for that, right? Or you haven't presented anything that will make them money. So why should they disclose to you what they have or what they don't have? Actually, no one has that obligation towards you, regardless, right? So you have to change your mindset from thinking, I don't have it, I can't get it. If you don't have it, you better know how to get it. Okay. You better be open to different possibilities on getting it and making it work. So you can't say you don't have money and you don't want to put in the work, right? If you don't have money, you better be ready to put in the work and it's gonna pay off, right? And the work can be like feeling uncomfortable or feeling unsure that your knowledge is enough, that you have enough information, or just stepping out afraid. It's work, right? Because you're out of your comfort zone. Now you got to come out of that comfort zone and start to do things differently. A joint venture, which would be a partnership where you're explaining the deal. Hey, we have this deal. This is the projected profits. We can split. I brought the deal. You can bring the finance part of the financing, or maybe you have a good credit score. So you're saying, I brought the deal. I'm working out the financing on 85% of the purchase price plus 100% of the rehab costs. Because in a joint venture, you just need one partner to be on the loan, right? So you're already bringing everything to the table. And so even if somebody brings a down payment, it doesn't automatically qualify them for half of the profits. It depends on how you structure the deal, right? So if if the broad's 15% of purchase price and you are financing using a main lender who is qualifying you based on the deal structure, the deal numbers, because the lenders know the numbers that don't work. So deal number is working. Then you can present it. Yes, you are bringing most of the money, and you're really just giving them an opportunity to be a part of the deal, right? So you have to understand what you have. That's with credit score. But let's say you didn't have a credit score. You didn't have a good credit score, and you don't have money. How would you present this? The deal is the most important thing. Without a deal, we would not be talking about splitting profits. So at that point, I'll say be noble and split halfway through, right? Because no deal, no money making, no deal, no profits. If I didn't know how to structure this deal, we would not have a $50,000 to share, or a 60K or 70K or 80K to share. But I brought the deal, which is the most important thing. And if you don't want to partner on this, I have other people who would be willing to take the opportunity, right? So joint venture is heavily dependent on your knowledge, what you know. Okay. What you know is very important for you to be able to finance the deal. So we're talking about joint venture, not just with people you know, but people you don't even really know. Like you can post a deal. You can be a part of a community that does this. And you can try to figure out who's going to do this with me within that community, not necessarily people that you know personally, right? So there are a bunch of ways to go around doing a joint venture. Okay. So joint venture is one nice big option. And then the other option would be business funding. The business funding is huge. And we're talking you're opening your LLC and creating this business, and you're actually applying for working capital. You're applying for maybe lines of credits, you're applying for business credit cards, you're applying for business loans. And the good thing about these products is they don't affect your personal credit. So it's not going to be on your personal credit saying that you owe this amount to this lender or this institution, because it's business funding. Okay. So if you don't know, you don't know. But once you open up your business, you can look into different business funding to be able to come up with that 8 to 15% in quotes that you think you're lacking. Okay. And then the other thing right here is private lending. And there's a whole process to private lending where, and that's actually my favorite, private lending is where you have individuals who are actually lending money towards a deal. You don't need to do a joint venture where you have joint venture agreements and everybody knows what they're getting from the deal. Everybody makes the decision. The issue with everybody making the decision is, or just making sure to agree on the decisions is, one person might be more ignorant than another person. One person has more experience. So you gotta be really patient and be willing to just make some compromises here to make it happen. And you can keep doing that as you improve your personal profile, which is not a bad thing. You're still making money and you're doing that as you go. But private money lending or private lending doesn't have that component of joint partnership. So it's not really a partnership. It's more of a somebody else or a lender or private individual having a note on a property, just like the bank. The bank probably has a note on your house if you own one right now. The same way with these individuals, and that means that their money is protected by the assets itself, okay, and insurance. So their money is protected by it. This is a really secured way of funding because it's the property, the lending is backed by asset and insurance, but also this is not something you find in other kinds of investing like stocks. I don't know if you get insurance. I mean, if people should could insure their stocks investments, then that would help a lot. It would reduce all the heart attacks going on when the markets crash with the stocks and things are not the way that people want it to be. So this actually is a lot more secure than those other forms of investing. And you can see that people can see that you're given a set percentage, just like you're doing to the other lender who's covering the majority. You're giving this person a set percentage of the money. That's the loan itself. That money that's put into the project, that person gets, this private lender gets a set percentage of that amount that they're investing. It could be a 12-month duration, it could be less, could be more, depending on agreement. Okay. And the other option would be a 401k loan. So it's your money, but for the most part, you can't touch it without a penalty. So no penalty if it's paid back on time. Usually they give you around 60 to 90 days, but you got to discuss with the custodian and see what's kind of leverage or leeway you have to be able to use a 401k. But there's no point if the way that 401k portfolio is going is not yielding as much as it would have yielded if you put some of that into real estate investing, hence diversifying your 401k. You don't want to put all your eggs in one basket. So definitely, some people have this sitting or growing in quotes, and they say they have no money to buy properties, right? So you got to look in there and plan. You got to calculate, put the numbers together and see if it makes sense for you to even pay a penalty if necessary. Because sometimes we're running away from things, but really, how much is this penalty if you pulled out X amount? What penalty am I running away from? What am I afraid of? Right? So put that number in and see what's the risk versus benefit is. If I'm making 50K, for instance, on this deal, and my penalty is $1,000, does it make sense for me to even pull this money into that investment, right? So definitely look into that. And then some people have life insurance that actually have cash value. Okay. So talk to insurance experts, some of you guys. I don't know if you have that. I don't know if it makes sense to say type in the comments if you have that. Because I don't know if your family member is watching or if someone is stalking you. But some people have that life cash value life insurance, and it is a different story altogether. It's something that you need to learn and read about. So yes, definitely your life insurance can be something that you can pull money from. So check with, again, maybe your custodian on life insurance. Okay. And then the other thing right here, seller credits. We don't even discuss this enough. Seller credits is amazing. And it means that you go to closing table, you see that 8 to 15% that you didn't have, your seller, whoever selling that property to you, takes, some of that amount of, if you were at 15%, maybe you can put half of that into seller credits, and that means you only need to come up with 8%, right? So it means that you're having seller credit you that amount and you're including that same amount in your purchase price. So seller credit is also another way to come up with little cash to closing. And the other thing here is personal funding. Just like business funding, we like to consider business funding first because it doesn't touch your personal credit score. Now, personal funding, you can qualify for lines of credits as well. You can qualify for credit cards. You can qualify for a personal loan under your personal profile. But would say I'll use that as a backup. So if I'm sure that my credit score is going to reduce due to this activity, and that was the only activity that I thought that it made sense for me in my personal situation. What I would do is I would have to measure the pros and cons, right? So if my credit score drops, then what? Uh, if that's my only hope and I lose the 50K deal, would it make sense for your credit score to drop for a 50K profit deal? So that's the question you're really asking here. Most times it makes sense because you have no other use of the credit than for the credit score to make you money, right? So yes, if you have this option, take that first, but this will be a backup plan. And then next we have a home equity line of credit, also abbreviated as HELOC, home equity line of credit, where you're actually pulling equity out of a property that you own or your home to invest in real estate. So would I rather sit on a home that has $300,000 in equity and I'm saying I don't have money to buy additional properties? It doesn't make sense because we're seeing that leverage actually makes you a lot more money than if you were just stuck with one property that has a lot of cash, right? So you put that money, you expand your portfolio. So rather than, just paying your mortgage, you're having other properties pay your mortgage and other living expenses, right? So you can pull an equity, you can pull a home equity line of credit, HELOC, out of that personal home to buy additional properties to make you more money. And to have that take care of your home, you live for free, and then your other expenses can be taken care of depending on what you're getting or what your numbers look like on those other properties. Okay. So home equity line of credit is another one. And then we have cash out refinances. Very similar to home equity line of credit. However, in this case, actually, so let's say on a 500K home, you only owe 200K, which means you have around 300K in equity. So rather than pulling out a HELOC, you went ahead to do a cash out refinance. So now maybe your goal is to actually get rid of the old interest rate mortgage. You want a new interest rate mortgage. Usually in this market, people would choose a HELOC over a cash out refinance because the interest rates were better then. But if, let's say, interest rates are down now, you want to do a cash out. So you cash out, you change that mortgage altogether. Now you switch over to a mortgage that has a higher loan amount. However, that's because the difference has been cashed out to you. So you're calculating the numbers. If I have a higher loan amount, but then I have lower interest on this one. So maybe with that, even with the higher loan amounts, I'm still paying something similar because of the lower interest rates. If I'm paying anything slightly higher, how much am I getting from the properties I'm buying, right? So you're weighing your options to see if it makes sense to do that. It's a numbers game, okay? Then the other thing right here is creative financing. Creative financing sounds like a movie to many people, but I've done all kinds of creative financing. It is real happens. One of that is seller financing, where the seller is actually the mortgage holder on the property. So you're buying a property from a seller rather than paying that seller cash at closing. They they say something like, or you are offering to actually have them carry over that mortgage. So you're not going to the bank to actually have a bank finance this property. You're having the seller do a seller financing. So instead of them being paid that 300K, which is what they're selling that property for to you, you owe them 300K. So rather than paying 300K at closing, that 300K is something that goes on in notes with a monthly payment and interest, just like the bank does. So they put that on an amortization schedule. There's a principal, there's interest to pay the seller every single month. Why would the seller do this? Why would someone not want to get like total cash out at closing? Why would they want to carry over a notes on that property. They should forget about the property. It should be done. Yes, so when they sell to you using seller financing, they don't own the property anymore. They only hold a note on the property, which means just like the bank, they can foreclose on the property, but you own it. They don't own it anymore. Why would they do that? For some people, tax reasons, right? So sometimes you sell that house and it's more taxes, costing you a lot more too, because depending on everyone's financial situation. Have you made too much money that year? That additional income looks bad on you and on your taxes, or maybe you're trying to stay away from capital gains taxes. You're trying to defer the capital gain tax. That defer your tax payments, which takes you out of the window of capital gains, right? So you want to reduce the amount of taxes you pay, or maybe you want to be tax free down the line, right? So seller financing is definitely attractive to many people for that reason. And then, of course, they make more money, so they make interest, right? Every month they're making interest. So they are going to make more than that 300,000 that they would have made if they did it at once, right? So there are a lot of benefits under seller financing. That's why it's attractive to many people, especially investors that know how that works and don't need the money right now. They would carry over that mortgage for you if you ask and if you present it in a fair manner, right? So if you're looking like for like a 0% seller financing structure in this market where interest rates are high, the seller might not agree. There's some 0% structures that have gone through over the years. However, I'm not sure that this is a good time to present a 0% seller finance. Then what isn't it for a seller? So yeah, the nicer your offer looks, the more likely that it would be accepted. The other thing you can do right here is lease options. Okay, so you're not so you're actually leasing to own the property, and when you do that, you're able to sublease that property for cash flow, monthly cash flow. You don't need a down payment for this, right? So it's a whole structure where you're getting cash flow. You don't own the property yet, but you're getting cash flow monthly on the property. On the seller's financing side of things, you own the property, you're getting cash flow, and you're building equity as you go. I dare say even on the lease options, you're building equity. I have a very juicy story on lease options that's crazy equity build. Under contract for $130,000. Now the property is worth $350,000, right? That is equity build. By the time you're ready to exercise your option, buying time for the seller, because sometimes the sellers are underwater and they don't want to sell right away. If they were selling right away, they'll have to come up with money at closing. So they want to prevent that from happening. So you're coming with your solution and you're paid heftily for that. Right. So lease option is a very good one. Good, no money down, creative financing strategy. And then subject to. So this can get controversial for some people, like taking over payments on somebody else's mortgage. Note that I did not say that you're taking over that person's mortgage. You're taking over the payments of that mortgage. That means as they're selling that property to you, they are not getting out of the mortgage. They stay on the mortgage, you continue to pay. Why would people do that? Because maybe it makes sense. Just like the other lease option person, they don't want to come up with money to close. Maybe they have to bring 15,000 to closing, 20,000 to closing. Maybe they're a little bit underwater. Maybe they took a HELOC and they're not paying back. Now the property is over leveraged and they need time, but they cannot stay in the property. Maybe they have travel for work. They don't want to be a landlord, don't want any property stories or situations, just want to be off that. They don't want to be an out of state landlord. And a lot of other reasons, right? Sometimes you have probate properties that are that way. So, subject to is another highly relevant creative financing strategy. That's also an option if you're looking to be very light or go very light into a deal. Okay. All right. So, what questions do you have? You can type that in the comments. I'm going to look real quick and we're going to talk about our resource for the night. And I'm just gonna say hi to everyone again. For sure, I said for sure here. So someone says, should you pay points? Yes, you would if you were talking about a hard money lender, you do pay points to them, but not the creative financing strategies though. So if you're talking private money lending, no, you don't pay points for private money lending. Okay. So that's one thing I saw on the pitch with Peachtree Property Management's comment. And who else has a question here? If there are no questions, we're going to go straight to the resource for tonight. Okay, so we have a real estate partnership agreement. So you have a partnership agreement that's will be distributed to you. So you just need to say resource in the comments to get that, and Meg will check the comments to make sure you're getting that resource. So if you want the real estate partnership agreement, type resource in the comments to be able to get your own copy. So resource in the comments to get your real estate partnership agreements. And also we can have a free call session if you want that to clarify your goals or your next steps. We usually don't do this, so this is interesting or strange on the call, on the training. So just follow the link to book a call, and we have free sessions available. I don't know if we have next week, but maybe the following week there might be some sessions available. So take advantage of that. Certainly, it's realestateacquired.com/discovery. If someone wants to type that in the comments, realestateacquired.com/discovery. And actually, there's one thing I didn't remember to do. Okay, so while you're typing, I just want to take care of some loose ends here on my end. Type that in the comments. And I'm gonna update this real quick. Right one. Okay, so realestateacquired.com/discovery. Okay. So follow that if you want a free call session. It will be about 15 minutes long, but you'll come out with a lot of clarity on how to go about next steps, your next goals, and see if whatever makes sense for you to move forward or just have some next step action. Because it doesn't make sense to come and listen up and learn without taking any action. So that will be your opportunity to start to take action and have an action plan in place to be successful in real estate investing. And also, finally, you can type coaching in the comments if you want to get help. So you want that one-on-one and group approach to help you get into your first property and move forward from there. There are definitely processes and procedures necessary to follow in order to be successful in real estate investing. If you need help putting together all that you're learning, everything, maybe you have some information overload, you're not even sure what to do right now, you're not sure what to follow, who to follow, you're really confused, or you feel like you're at that point where you want to take that step but you need help. So type coach in the comments and we'll reach out to you. Actually, I was on the phone with someone today and we're discussing how the market has changed since 2020. Within the last 5 years, guys, property prices have doubled in some areas, actually. In some areas, because inflation is different all across. But property prices have doubled in some areas, in my area too, right? Doubled just within the last 5 years. Unfortunately, some people have been considering getting into real estate since then. Then again, we have this particular season in real estate where dropping the interest rates is a very sensitive concept. Why is that? You're dropping the interest rates right now. The competition to get properties will be very high. People will buy properties just to take advantage of the interest rates, even if they never had a goal in mind, or maybe they never had that kind of strategy in mind before, but now they just want to take advantage of it because they're scared that when they feel ready to do anything real estate investing related, or just real estate related, then they will be missing out on the low interest rates. So if everyone is on the market buying properties, property prices will go up. People are currently still buying with high interest rates. So you can imagine that the prices you see today will be no more if interest rates decline. So don't let that happen to you again if you're one of those people who delayed things since the last 5 years when you wish that you had bought properties in a better market. This is still a better market than if you were going to wait. Okay. So, three things here: type coaching if you want to get in, type resource to get your free resource for the day, which is the real estate partnership agreement, and also to get that one-on-one free discovery session. You follow the instructions on the screen or do a screenshot. It was nice to be here tonight. Please, if you want to type good night to everyone here, good night, everyone. Good night, guys. Please just type good night. Let's keep the spirit of the community. If you haven't registered for our summits, you're definitely not doing something right. So our summit will be in Connecticut. It will be October the 9th to the 11th, leaving on the 12th. Okay. We'll do a lot of things like workshops on, well, the real estate investing business. When you're in the business, there are things you need to take care of. You need to take care of accounting, you need to take care of legal, right? Stay out of trouble, do things the right way, know exactly what to do to boost your profits, increase your profits, to do the right things in the right market. Highly relevant, highly relevant sessions, even funding, right? And this year, particularly, we'll be looking at gap funding, right? So definitely go ahead and register in case you have not. In case you have not registered for the summits, October the 9th to the 11th, we had early bird extended um, for 3 additional weeks. So take advantage of early bird if you wanted to attend the summit. Maybe it's going down to about 2 weeks now because I think it was extended last week. So yes, take advantage of that. All right, you're welcome. Good night, everyone. Good night, Mimi. Thank you, Coach. Okay. Good night, Mimi. Drell, good night. Thank you, everyone. Good night. Thanks for sharing your knowledge. Thank you, guys. Thank you, Wumi. All right, guys. You see, I'm reluctant to go. I feel so comfortable here. So good night, everyone. And I will see you on the next one. Bye.